Yeah, so I think what Bitcoin is deeply aligned with liquidity and deeply aligned with sort of risk on, risk off sentiment. I think when you look at what's happening in reaction to the developments in Iran, is that markets are not overly reacting on either side of that equation. There's not like a dramatic increase or decrease in global monetary liquidity from a short-term perspective. There's not a dramatic increase or decrease to this point in the evaluation of risk assets. And as a result, it's just not primarily a Bitcoin story at this point in time.
Many expected major geopolitical events like tensions involving Iran to significantly impact crypto, but surprisingly, Bitcoin has remained relatively stable. Why? Hougan explains that Bitcoin doesn't react to headlines, it reacts to liquidity and risk sentiment. In simple terms, if global liquidity expands, Bitcoin tends to rise. If liquidity contracts, Bitcoin struggles. So far, geopolitical tensions haven't triggered massive liquidity injections nor caused a dramatic shift in risk appetite. As a result, Bitcoin remains largely unaffected. The key takeaway? Not every global event is a Bitcoin event. Crypto is currently being driven more by internal dynamics than external shocks.
Yeah, absolutely. So if you look historically, there've often been not every year, but some years, bottoms around April 15th. April 15th is, of course, tax day in the US. And so anyone who had substantial gains last year may have to pay their taxes to the IRS before on April 15th. And so I think that's often led to some selling as people raise funds to do that. I think more broadly, there are lots of reasons to imagine we're getting closer to the end of this winter than the beginning of this winter. I think we've been in this winter for a long period of time. I think the balance of positive and negative news flow is shifting in a positive direction. And so I'm optimistic. I don't think it's a V-shaped recovery after April 15th. I think there's still some risks in the market related to the Clarity Act approval, related to rising concerns about quantum risk in Bitcoin. But broadly speaking, I think we're at the bottoming phase. And so I'm optimistic that the spring in the real world will align with a spring in the markets. So I think what Bitcoin is deeply aligned with liquidity and deeply aligned with sort of risk on, risk off sentiment. I think when you look at what's happening in reaction to the developments in Iran, is that markets are not overly reacting on either side of that equation. There's not like a dramatic increase or decrease in global monetary liquidity from a short-term perspective. There's not a dramatic increase or decrease to this point in the evaluation of risk assets. And as a result, it's just not primarily a Bitcoin story at this point in time. I think there are reasons to be worried about a oil shock and that might eventually impact the economy and that might eventually play into risk assets. But that's just not what we've seen on the market so far. Again, you have to think of Bitcoin to the extent that it reacts due to liquidity or concern about a dramatic reevaluation of risk assets. I haven't seen that in response to this Iran war, and therefore I'm not surprised that we haven't seen Bitcoin respond. It's not every story is a Bitcoin story. The Iran war is a really important geopolitical event, but I don't think it's a Bitcoin specific story. I think there are other stories that are impacting Bitcoin much more right now than that. The biggest two are the 4-year cycle, which is this strong historical narrative that has an emotional pull over investors that's been happening for many years, and I think is the primary reason that we pulled back at the end of 2025, and the primary reason we've been slow to rebound in 2026 is that the mentality of the 4-year cycle itself causes investors to want to be cautious on the market right now. So that's an example of a crypto native factor that's really strong. The second one is the outlook for regulation in the US and specifically the outlook for the Clarity Act, which I do think is really important to the future of Ethereum, Solana, and DeFi apps. Those two forces tell you a lot more about what's going to happen to crypto than I think right now what's happening in the Middle East. Now, it's of course possible in the future that the events in the Middle East get so extreme that they can overwhelm these crypto native forces. But right now, the crypto native forces are the ones that are in control and the ones that are primarily driving price. I think it depends on what the government's response to either of those scenarios are. So, in the optimistic scenario where oil, there's a solution to the crisis in the Middle East, the Strait of Hormuz reopens, oil prices settle into their traditional trajectory. I think that that's just a sort of normal economic activity on the margin, probably slightly positive for risk assets. But I suspect that the market is broadly pricing in something that looks like that outcome. The other scenario where oil spikes to hundreds of dollars, um, or at least north of $100, if there is a really sharp recession, I imagine that the government's response to that will be to pump money into the world to support the economy during what it sees as a temporary shock to energy prices, and that will be sort of supportive for Bitcoin. I think the reason that it's not reflecting those is we don't know which scenario we'll be in, and we actually don't know in a negative scenario what will happen down that road. Right? Will we respond with an injection of liquidity, or will we be concerned with runaway inflation and therefore hold back from injecting liquidity into the market? So, until we get a little bit more clarity on which of these many paths we're going down, I think the market is, at least for Bitcoin, pricing in the fact that it's probably more a sort of stumbling middle ground. So, look, I do think in the event we get extreme geopolitical outcomes, particularly extreme negative geopolitical outcomes, that would affect Bitcoin. I just don't think that that is what the market is expecting at this point, and therefore you haven't seen much of a response on the Bitcoin side.
One of the most important and underestimated forces in crypto is the 4-year cycle. This cycle, historically tied to Bitcoin halving events, has shaped investor expectations for over a decade. Hogan admits he made a critical mistake. He assumed the cycle had lost its relevance. Logically, that made sense. As markets mature, patterns should weaken. But he overlooked something powerful: investor psychology. Even if the cycle isn't fundamentally driving prices, belief in the cycle becomes self-fulfilling. When investors expect downturns, they sell earlier, delay re-entry. This collective behavior creates the very downturn they fear. According to Hougan, this psychological force was a major reason for the crypto pullback starting in late 2025 and the slow recovery in 2026.
The mistake I made in September was not recognizing the power that the 4-year cycle still held over the crypto market. And I think it was that reflexive impact of the 4-year cycle combined with the unique event of 1010 that really set off this sort of sharp crypto winter pullback. So that was the error that I made. I sort of logically assumed that the 4-year cycle was dead, which I think logically made sense, but I ignored its emotional pull and therefore ignored some signs in the market that indeed it was having an impact, and that impact was accelerating. But I don't think that I made a mistake on Solana itself. I continue to think that the underlying drivers of growth in mainline L1s, whether that's the growth of stablecoins or tokenization, remain intact. I think those markets have a chance to be 10, 100,000 times bigger than they are today from a transaction perspective. And I think in that world, Solana can compete very well with Ethereum, alongside Ethereum as a leading decentralized layer one. I think that thesis is still intact. So if you have a long enough view, I'm still very bullish on Solana. But I did misweight the probability of a dramatic enforcement of the 4-year cycle, which I think explains the pullback we've experienced since October, and that I think we're hopefully at the tail end of getting out of. I think it's only bigger prices, man. The challenge with the retail investors is A, they've had 15 years of investing in crypto, so they're not coming off zero. And B, they have all these other new enticing things that are attracting their attention. whether it's prediction markets or the SpaceX IPO or the AI boom, etc. So I don't think absent price acceleration, we're going to see retail come back in mass into crypto in the way that they perhaps did in in the post-COVID era. There are simply too many other attractive choices for them right now. And I think they're a little beaten down in the crypto market. So I think it's going to be institutional investors that drive the next bull market in crypto. That's fine with me. They have a huge amount of capital. They have lots of reasons to come into this space. I don't expect retail to come back in a major way until we're already trading at or near all-time highs on most major assets. I just think I wish that weren't true. I wish retail were waiting on the Clarity Act to come piling back in, but I don't think that that is the case. I think they're more likely to be focused on these other exciting areas of the market, and that the future marginal buyer of crypto is probably more in the institutional camp. First of all, if you want to invest in the growth of stablecoins, I think you need to both own the crypto assets on which they move, Ethereum, Solana, Tron, maybe Chainlink as a data source, as well as crypto equities. The leading crypto equity is Circle. Circle has a dominant market share amongst regulated stablecoins, certainly in the US. Uh, when I look at the history of financial innovation, every time there's a financial innovation like the ETF market, or maybe fintech apps, there's always a thought that the big names will come along and steal market share from that market leader. And it usually doesn't happen. So I think when a lot of people look at Circle, they assume that it will struggle when Bank of America and JP Morgan and Citigroup and Wells Fargo all offer stablecoins. I just am not sure that that's true. I think the history of financial innovation says that early movers often are very sticky. And if you expect Circle to maintain anything like its 30-ish% market share of the stablecoin market, that means that if you're aligned with what the US Treasury Secretary says, that stablecoins could grow to almost $4 trillion, it's going to be managing north of $1 trillion of stablecoin exposure and generating yield on that. If it can do that, is making a lot of money, and the stock valuation looks pretty cheap right now. It's not a slam dunk. I'm not saying it's a 100x stock opportunity, but could it be 3, 4, 5, 10x where it is now over the next 5 years if stablecoins grow and it maintains its market share? I think mechanically that's where it could end up. And I just think its probability of doing that is higher than the market gives it credit for. Again, not a slam dunk, but I do think you can walk yourself into a very nice valuation with some very simple assumptions around Circle's success.
Despite optimism, Hougan highlights key risks: regulatory delays or unfavorable outcomes, concerns around quantum computing and Bitcoin security, potential oil shocks from geopolitical instability, uncertainty in government responses to economic stress. In extreme scenarios, a surge in oil prices could trigger recession. Governments might respond with liquidity injections, bullish for crypto, or tighten policy due to inflation concerns, bearish for crypto. Right now, markets are pricing in a middle ground scenario,